decline here in the S&P to down 15 at 1627 is right back at support again. So, I'm not overwhelmed by the action here.
Huh. Okay. Well, hey, you guys are the pros. That's that's why we do this show. It's kind of like, okay, this too shall pass, right?
If it does, and the market turns back up, I certainly wouldn't want to be short. Although we are short the gold, and that's profitable.
Good. Okay. Good stuff. All right.
Yeah, well, the gold's down another $12 or $13 today, back down into that 1375, 1380. If it doesn't turn up, I'm going to guess it'll be 1280. It's down 12 right now at 1374.
Because that puppy was all the way up to what, 1800 or 18? Yeah, 1800, wasn't it? Wow. Yeah, that's.
Yeah, and up there, everybody and their brother were talking about $2,000.
Yeah. Oh, yeah. Yeah.
And now we're 40% away from that.
Yeah. Yeah. Well, there is a lot of jumping for joy right now in Seattle, I would imagine, as Boeing, turning it around to a little positive news here, Boeing upgraded its 20-year forecast for the fact that 35,280 new jets worth $4.8 trillion will be added to the world's fleet over the next 2 decades from Boeing. And that's just one.
It's amazing that Boeing can actually. Boeing, I think, is the only company around that can give you a 20-year outlook.
Yeah.
Because they have the back orders.
Exactly.
I mean, they have the backlog to do that.
Yeah.
And so, that sets it apart. It's kind of an interesting, company that way.
Well, it was very interesting if you dig deep into this Fox Business story. They look ahead at 2032 is that 41% of the fleet is of flying airplanes at that point are going to have to come out of service just simply because of age. So, that in itself is big news right there. The fact that, they've got a built-in obsolescence, if you will. But, it's not really. But, with the many millions of miles those things fly. But
planes are kind of an interesting product in that, you can still buy a DC-3 that's in perfect running shape.
Oh, yeah. Oh, sure. Yep.
I mean, the maintenance on these things is phenomenal.
Uh-huh.
They replace everything. I mean, the only thing they don't replace is the airframe.
Yeah, yeah. Oh, yeah. I mean, I've been on them. And they're just the same Goonie birds that I used to fly over to Catalina Island on. When United Airlines, believe it or not, had air service from L.A. to Catalina, the flight took 15 minutes. It was like plane goes up, plane goes down on top of the island. Yeah, it was amazing.
Well, it's like when I went to school up here in Boston and used to go home to New York on the shuttle, and it was $8 or $12 for students, and by the time you reached cruising altitude, you were already on your way back down.
There you go. Oh yeah, yeah. There's no doubt about that. But
so Lululemon
to replace them is for fuel efficient.
Hey, Casey.
Yeah.
Hey, how are you?
Hey.
Yeah. Well, this is
doing pretty good.
This is right up Casey's alley, as Charles just mentioned, and that would be yoga clothes for women. That's right up Casey's alley.
Absolutely.
Let's talk about Lululemon.
They're getting crushed, huh?
Oh man.
Yeah, the stock is down $12.
Yeah.
They beat top line and bottom line, but the CEO is leaving.
Yeah. I have to say she doesn't look 51.
No.
So, anyway, I don't know. And you guys have talked about this stock for, what, 5, 6, 7 years, something like that. I don't know.
Yeah.
It's been forever. And, yeah, and it's yoga clothes. And workout clothes, basically.
Right.
Yeah. Yeah.
And very expensive.
Oh, yeah. Yeah, no doubt about it. But they're blaming that shear thing that came out, that big news story last year or something that started to, really
And
collapse.
it's a quality control issue. And frankly, I don't see why she has to go.
Yeah, it's amazing. But so anyway, Lululemon is one of the big stories of the day. But Casey, how about you?
And there's another big story that's kind of interesting. QuestCore, which is a company that we have traded a bunch of times too. It's a drug company.
Oh.
Their stock is $7 today because they did something that none of the drug companies have, either done and publicized. They bought a generic drug manufacturer.
Really?
Yes.
Huh, okay. Interesting.
So now, you look at it and say, geez, why doesn't Pfizer do this? Why doesn't Merck do this? Why doesn't, who's going to buy Perrigo? The bottom line here is it makes absolutely perfect sense.
Mm-hmm.
You give the nod to your generic maker to make your coming off patent drug.
Wow. Well, and I don't know why I instantly thought of you guys the moment I read this story about Goldman Sachs accepted 15,000 bottles of wine as a loan collateral for a former executive last month. 15,000 bottles of wine, of course, from Bordeaux, one of the great wine regions of the world. I don't know why this has amused me, but I mean, I'm sure there's wine collectors around there that'll say, what are you talking about? It all depends on the wine.
You could open up 3 restaurants and stock three wine cellars with that. I mean, it's absolutely a very, no pun intended, liquid asset that you have no trouble disposing of.
Yeah. Oh, yeah, that's right. Have a lot of fun doing it too. Oh.
Yeah, right.
Yeah. But anyway, so that's those are some of the big stories of the day, huh? So Michael, everything was kicked off kind of in Asia. What's going on? I mean, OPEC is now saying that they're worried that oil demand around the world is going to go down. Now, how is that possible with as much construction and everything else that's going on all over the world?
Well, they're worried about their own exports as our exports increase. They're into more competition. Asia is the big buyer of oil of all types of. They need energy, and we're starting to encroach upon their market. And of course, the Asians are buying up assets in America too, as we talk.
Yeah, there was also, Mike, I think that there was a report out today that talked about the amount of shale oil that there is and raised that estimate yet again.
Yeah, there's the exploration in the Eagle Ford and other areas is expanding. So that's going to really help American exports, and that hasn't been really in the forecast of the future. It should really help America pay its huge entitlement bill in the coming years.
You know, I remember several years ago, Mike, when you brought Lucas Energy on, and they were talking about the Eagle Ford Shale. You know, and it's like one of those things. Okay, unless you're in the oil business, you don't even know what that is. And what's amazing now, and it's all because of hearing those guys talk about the oil business, I guess, over the last 7 years or 8 years, however long you've been on, and you just think that at least once or twice a week, you know, either on Fox Business or Market Watch or one of those, you see a story emanating from that Eagleford Shale area. You know, when one of the big companies is doing X or Y or something like that. It's really amazing how that whole area of Texas has grown so much.
And in another related note, Chevrolet has decreased the price of the Volt by $4,000. That's on top of the $7,500 federal credit that you get. And in California, another
IOU.
I believe it's. I think it's another $1,500 that you get off. So if you want to buy a Volt in California, you can buy it for $28,000, which makes it incredibly reasonably priced.
There you go.
The problem is that lithium that's used in the batteries, our major source of energy, is not readily available around the world. Lithium will be in more short supply than OPEC crude has been. I mean, lithium is really a rare earth. And so it's really just a short-term answer.
Yeah.
And we're going to have on the radio in a few minutes Laurence Roe, an Australian who's drilling in America. I imagine the Australians, the greatest drillers, have come to America, and they've got better results than most American drillers. Target. They are now trading on the OTCQX, and you can read about it on the Princeton Research website. And you'll certainly hear from him in a few minutes.
Huh, okay.
Laurence Roe.
Okay, great. Now, what's the name of his company, Mike?
Target
Energy.
Okay.
Target Energy. Cool.
But ironically, I mean, they're getting much better results than American drillers in the same areas. Much better results.
Oh, okay. I'm not going to go there. All right.
No, they came here and teaching us how to drill.
Yeah. No, it's... oh, okay.
It's amazing the results they're getting.
Yeah.
I mean, they're netting something like over 300 barrels a day, and already. I mean, and so you see they're actually profitable now, and they've only been here a short time.
Wow.
What's their secret?
Well, you ask him. Ask Laurence.
Probably talent, Charles.
Maybe.
Huh. Oh, man. Unbelievable. Well, hey, that'll be great. Well, good to hear from Laurence, to say the least. Casey, your business, what's going on? Anything new in your world?
Well, it's another 2 weeks. We're heading up to New York to shoot some television commercials.
Hey!
And we're going to be doing a 15-second spot, and it's what they call, I'm kind of new to this industry, but call it saturation, where we do a 15-second spot. We're going to be running on ESPN, and we basically just blanket ESPN with the 15-second spot.
There you go.
And the whole theme behind it, 15 seconds, you can't really sell a heck of a lot of stuff. So all we're trying to do is use that 15 seconds to drive people to our website, to tsunamistrike.com.
There you go.
So took the simple yet somewhat obvious approach. Went and got just a drop-dead, can't-be-real, perfect woman to stand there and smile at you for 15 seconds and tell you to go to a website.
So you're not
So
talking
the GoDaddy approach.
You know what? They did something right. That's for sure.
You're not talking
sure
about
did.
You're not talking about Lindsay Lohan then, right? Oh, I'm sorry.
No, this girl would stop traffic.
Ooh, okay. Well, we need her on this show then. Oh, oh man. Well, great. Hey, just a little word of the wise, my friend. Don't forget about the new Fox Sports Network that starts August 17th. I mean, that's going to be, in typical Fox fashion, that's going to be wild and crazy. So don't forget about those guys.
Yeah, when is that? That's starting up soon, right?
August 17 is their launch date, yes.
Okay,
Yeah.
all right.
Yeah. Good stuff. So, well, that's great. So now, when do you post this puppy, and when does it actually hit the air?
Well, we're shooting it on June 24th, so figure 2 weeks for post-production, and after that we'll be ready to go. So sometime, second to third week of July, it should be on the air.
Very cool. Good stuff. Well, make sure you get a copy over here so we can put it on the website.
Oh, will do.
Oh yeah. No, that's great. That's really neat. So that's good. That's good. ESPN should serve you well, to say the least. My old stomping ground. So they should do a good job for you. Good. All right. Well, Charles, in your world up in the Northeast, not all that much going on.
Nope.
Except secrets, I guess, or stories about secrets, or
yeah.
Actually, do all of us want to say hi to everybody who's monitoring this phone conversation? No, I'm just kidding.
It's pretty amazing when you look at it as to who it is who actually has access to your information.
They all do. They've had it for years.
Yeah.
I mean, this is the outgrowth of 9/11, and that's why I don't understand why it's such a big story now.
Well, it's a big story because the guy who leaked it and the guy who had access to it was, a monumental nobody, flunked out of community college. I mean, the guy, and I think that really kind of the crux of the story is, look at who has access to your private information, and look at the security clearances that outside contractors can get to deal with that information.
Yeah, I agree with you there. Yep. Yeah, that's a bit on the scary side.
How did he get a job with Booz Allen?
I don't know.
There you go.
Who did he have dirt on?
And they fired him yesterday.
Yeah, but did you notice that? It's like, please don't kill our stock again. Please don't kill our stock. We fired him.
Right.
I love that story.
I mean, there's got to be a bigger story underneath it. They're hiding him in Hong Kong. It's...
And none of this was broken by the U.S. media. I mean,
right.
This is all the British media. I love it. I mean, I'm just thinking, everybody's got egg in their face here in the U.S. It's like, hey, come on. But, it's basically a continuation of the same story that actually broke in 2005 that very few people covered back then. And, it was like about the NSA. And there were only a couple networks that they even mentioned it. One was Fox. And it was like, it's like it just kind of disappeared. And here we are, 8 years later? Here we go again. Yeah, it's amazing. But you are right. It is amazing to figure out who's got information on all of us. I mean, that's what's truly amazing about all of it. That's something. Just something else. But Charles, other than that, tell us a little bit about your update service. What has worked? I mean, are you still on a roll?
The big account, which is $100,000 per unit, trades both stocks and options.
Right.
So that has a little less volatility to it because those stock positions very often go on for, really long periods of time. But the options-only side of the account, which is a $10,000 per unit investment, is very difficult to follow on a week-by-week basis. I mean, if I say, for example, we bought Apple calls last week, it's really difficult to say exactly where you want to be a seller. If this, then that. That's really difficult. And it also puts the onus on the account holder to do all their own work. But I'll give you the example. We paid $3.85 for some Apple calls at $4.50. Excuse me. And they closed, about $5.50 on Friday afternoon. Now, yesterday, we had to sell half the position on our 100% up rule at $7.70. But while the developers conference was going on, the stock was just not reacting well to the information that was coming out. You know, everybody thought that this iTunes radio or iRadio or whatever they want to call it was really going to hurt some of the existing services. Well, as it turned out, that's not the perception. You know, as that announcement was being made, Pandora, which is probably the biggest one of them, was going up, and Apple was going down. Well, we put out a text that said to sell the balance of the Apple calls. Those were done at $7.40. And as the news was being absorbed by the public, Apple was down to, $4.37, and those options that we sold at $7.40 are today up 40 cents at $4.20. They literally have gone from $8 and change to $2.50. So, you know, if you want to trade options, the only real way to do it, based on our track record, which is exceptional, is to deal with the update service. And the easiest...
Good work, Charles. Let's welcome Laurence Roe.
Yes, good morning.
Good morning.
Welcome, Laurence. An Australian in Texas.
Uh-oh.
Well, I have to wave the flag for the Australians.
I see a movie coming out of this, Laurence. That's no. I'm sorry, it's already been done. That's all right. Yeah, but tell us a little bit about Target Energy.
Absolutely. Look, obviously we're an Australian E&P company. We explore for oil and gas. We're traded publicly in Australia on the Australian Stock Exchange, but here in the US you can find our shares on the OTCQX, international platform. But the company's got offices in Perth.
Get a little closer to your phone there. You're kind of disappearing here on us.
All right.
There you go. There you go.
Okay. We've got offices here in Houston, Texas, and also in Perth, Western Australia. We explore and produce exclusively in the U.S. With properties in Texas and Louisiana. They're all in production. Our main focus at the moment is in the Permian Basin in West Texas, and that's our Fairway project. So that's us in a very short nutshell.
Well, how did you get production so fast?
Okay, well, I'd like to think it's a combination of skill and daring. We have generally looked for opportunities where, conventional opportunities where we had 3D seismic, good operators with a good track record. But a couple of years ago, we decided to get into the resource plays. We felt that was... you probably didn't have to be a rocket scientist for this, but it allowed us to decide that resource plays were going to be the future in the U.S., and that was a good place for us to be. We chose West Texas and the Permian because you could still drill relatively inexpensively. They're still drilling vertical wells, and the success rate was very high. We've drilled 4 wells in that particular project. They've all come online with good levels of production, both from what's called the Wolfberry section and the deeper Fusselman. So that's allowed us to accelerate our the increase in our production levels. We've tripled our production since the beginning of the year, and we've got more drilling planned before year end in that project.
So for folks who just really haven't listened to the show over maybe 5 or 6 years and are brand new to us, explain where the Permian Basin is in Texas. And obviously the Permian has been oil country for, centuries, I guess, right?
Yeah, over a century. The Permian is in West Texas. The town of Midland and Odessa are probably around the middle of it, but does extend into the southeastern part of New Mexico. But as you said, the first discovery was about a century ago. The basin has produced something like 29 billion barrels of oil and 75 trillion cubic feet of gas in its history so far, and the industry pundits, I think, are suggesting we've got at least that much oil and gas still to produce. It's a wonderful area for oil and gas exploration. a very giving basin.
Now, how in the world did a company in Perth, which is on the, for folks who don't know, Australia is on the other side of Australia from Sydney and all the major population areas, but home of the America's Cup. The way we could say,
briefly.
Briefly. Yeah, well, it's Alan Bond did win it, but and whatever happened. But anyway, there was an America's Cup in Perth, which is a city very much like San Diego, right?
That's correct. It's I think San Diego's got the climate that's closest in this country to that of Perth.
So, how much oil is there in that whole Perth area?
Well, Perth per se is it doesn't have nearly as much oil as we see in Texas. There are some very large fields elsewhere in the country and off the coast of Western Australia. Some very big gas fields. But to give you a kind of relative view, I think that the entire country of Australia has 21 oil and gas rigs running. This is a country that's not too far from the size of continental U.S. So they've got 21 rigs running. In the Permian, there's 395 rigs.
Oh my God!
At this moment. So,
wow.
That's why we're in the Permian. How we got there, we made a decision when we set up the company to work in areas that I thought shareholders would appreciate. That is, areas that are active, where you have high levels of success and you've got a substantial amount of infrastructure, so that in the event of success you can very rapidly monetize your asset and start building cash flow. And there's quite a few areas in the U.S. that satisfy that. We like the Gulf Coast region initially, but we felt that the Permian was a good place to go. So it took us a little while to get in there. I think folks in West Texas were not too familiar with Australians, but they generally got used to our accent, and we found that a very good place to be doing business.
So now, how long has Target Energy been around?
About 6 years. We listed at the very end of 2006 in Australia.
Okay.
We drilled our first well within a month, and we had our first discovery a couple of months after that. And it's kept us pretty busy ever since. As I said, we had success in the conventional exploration. We have a nice oil field in Louisiana that we're continuing to do work on. But more recently, we felt that the conventional plays, while they're attractive, we needed to look at something more robust, I guess, and that brought us into the resource plays, into the unconventionals.
Interesting.
So we've been around for a little while. We've had offices in Houston for the last few years. At the end of the day, it's important for us to be centered in the sector in which we're doing business.
Laurence, you talked about Gulf. Were you talking onshore or offshore?
Onshore.
Onshore, okay.
Again, that's consistent with us keeping the costs down. I've done offshore work. It gets very expensive very fast, and we still think there's an awful lot of very good value left in the onshore sector here. More than enough.
Was there any thought at all that the Permian may be over-oiled, if you will, or is there still hundreds and hundreds and hundreds of years of oil under there?
I think time will be the best judge of that, but there certainly is decades and decades of exploration. In fact, it was one of the interesting things we've seen is some of the larger players in the sector, particularly those that are looking at horizontal plays, are talking about drilling inventories that they've got now that extend for 10, 20, 30 years. And I think that you're going to just see that continue to expand. The levels of drilling activity will remain very high, I believe. The technology for horizontal drilling is well and truly established, and a number of the players have found some very good results in some of the shales within the Permian. So that activity is going to continue, and I think you will see more drilling, and I believe it's going to continue for quite a long time. And hopefully, you'll you'll see Target Energy continuing to be a part of that.
It's funny, Charles and Mike and Casey were talking a little bit earlier about OPEC and how they've said that the worldwide demand is going to go down. But and of course Mike immediately said that's because the U.S. competition is going to be there for oil exports. Is that the way you feel as well?
Yeah, I think there's certainly the potential. The increasing levels of production you're seeing here in this country is certainly going to be great for the local economy. The cheaper gas, the less dependence on foreign oil. I think all that's going to be extremely good for the United States, and it is going to, I think, send a message to OPEC. It will continue to send a message that the U.S. potentially being able to independently produce nearly all the oil that it requires. It's going to make it less dependent, and I think there will be, positive ramifications for that for OPEC. They're going to have to, sharpen their pencil a little bit, and will be a bit more pragmatic about things.
Interesting.
And Target is now OTCQX listed?
That's correct, Mike. Our stock code on the OTCQX international platform is TEXQY. TEXQY. We thought that fitted in well with our current strategy in West Texas. So we're trading there at the moment.
Yeah, C.K. Cooper is their sponsor. They're a boutique oil brokerage firm, and Deutsche Bank is the bank behind it. And it trades around $7, between $7 and $8.
Yep. We're currently trading, I think, an equivalent of about a bit over $7. So we believe we remain very good value.
Now, are you looking at potentially maybe a major oil partner in this deal, or are you going to go it on your own?
Okay, in the Permian, we have a 60% working interest. We have two other partners within that group, and we intend to stay with them. We have an operator who has 30% working interest. They are a Midland-based operator with deep roots in that community. We're very pleased with.
Did you say 16 or 60?
I beg your pardon, 60.
Okay, great.
So we have the controlling interest in the project. So even though we don't operate, we can drive it as we see fit. I might say that so far, everything works with consensus, and are sort of happy with the progress that we're making and the speed in which we're doing it. So we'll continue with those partners. In Louisiana asset, we have a 35% working interest. This is a field that has an upside independent estimate of about 4 million barrels recoverable, and we've only produced about 100,000 barrels out of that, so we're very keen to accelerate the work there, and that's we've just finished drilling another development well there that looks quite good, and we expect to bring that online, or complete it and bring it online in the next few weeks, and then hopefully we'll see more activity going forward there. But that's an asset that we like quite a bit as well. It's probably in the shadow of the Permian Basin efforts a little bit, but I think that still has potential to significantly contribute to our increasing production.
Well, you've done quite well. Your production is up to, 300 barrels a day now?
Yeah, it's over 320 barrels of oil equivalent. It's our working interest. So, as I said earlier, it's triple where we...
That's not too shabby.
No, and we hope to double that before year end with the additional drilling. So we're feeling pretty bullish at the moment. We have good acreage, a good program, good cash flow coming in. So the future looks pretty strong for us at this stage.
Now, do you hedge that out, or do you store? I mean, where is that 320 barrels a day going?
Okay, we don't hedge. The volumes aren't large enough for us to hedge it. To need to hedge it right now. We're also debt-free, so we have no external pressures to hedge. We're quite happy, obviously, with the oil prices at the moment. The oil is sold directly into the local market. I assume that goes ultimately to Cushing, but I couldn't tell you exactly how or where.
And what does it cost you to lift that oil?
Not a lot. Our finding and development costs for the Fusselman oil is about $10 a barrel. It's finding and development for the Wolfberry is $30 a barrel. So it's includes the drilling. So
you're profitable a long way down. I mean, not
absolutely.
that I'm expecting it to go that down like that, but yeah,
we could absorb a fair amount of downward pressure, as you say. We don't expect that either. Wells like the Fusselman, they will pay out in usually 3 or 4 months. We have quite good production rates with those. The Wolfberry wells will take longer, but then they have a substantially longer life as well. So we feel that the economics of drilling here, particularly for us, where we retain a program that is essentially vertical drilling, and it's a lot cheaper than horizontal, and that remains very good for our economic bottom line.
And do you find much gas in that area also, or?
We get some gas. The really neat thing about it is that it's very liquids rich. So, its energy content is about 1,400 BTU, so it's quite a bit higher than dry gas. And what we're finding is that we get substantially higher prices for that gas, particularly when you factor in the liquids. So if you're looking at a Henry Hub dry gas price of about $4 a thousand cubic feet, we're getting the equivalent of $10 or more for our gas.
Yeah, that's terrific.
We're very happy with that. We have no problem with getting some gas with that oil, but it's mainly oil. It's 75% oil or more.
Boy, that sounds great.
It's a great story.
It is a nice story. You
now,
got that right.
Do you own the properties that you're drilling on, or do you just deal with leases?
Okay, it's we lease. It's
okay. No. I was just thinking about it from an asset base. I mean, you obviously have great proven reserves, and I was just curious of how the property actually broke down.
It's all on your standard leasehold.
Okay.
Mike?
Well, it's a very interesting story, and I mean, you're very unusual from the standpoint of having no debt.
Yeah. Well, we've never seen the need to go into any sort of major debt program. From time to time, we have had convertible notes. Right now, we don't have any, and we're fairly happy with that. So that gives us a very clean look to our balance sheet. We have cash in the bank, cash coming in, and I said our forward program looks pretty healthy. So we're quite pleased with that.
Well, it's a great story.
Yeah, really is. Well, Mike, thanks for bringing Laurence on. And
yes, I think we'll be hearing a lot more about this company, especially as it starts trading in America. This is new. A lot of people don't know about it.
Laurence, what's the market cap of the company?
The market cap is about $30 million at the moment, and that's why we think there's a lot of upward potential.
Yeah, I would think so.
Yeah, for the stock. So we think there's a lot of room for it to move upwards. We have a good story, and it's going to continue to get stronger.
Laurence, bringing an Australian perspective into this, we're hearing a lot about the electric vehicles over here. Is there much of that in your country at all?
With the caveat that I've been living over in the States for a while, no, not really. I don't think there's any great pressure. We do see public transport occasionally powered by gas, but electric vehicles and things really aren't, I think, materially on the horizon in Australia.
What about natural gas?
We're seeing some of that. Australia is a gas-rich country, and I think it's happy to burn some more of that domestically. So we do see some of that, but again, it's in the larger public fleets. We don't see too much of it at a domestic level. Although you do see a number of taxis that will drive on LPG. But
Yeah, and your municipal vehicles, basically, your buses and trucks
and
stuff like
and
that.
that's pretty much the extent of it. I don't see a great change to that coming in anytime soon.
I saw that waste management is 90% of the trucks they buy now are natural gas, and they're essentially setting up natural gas pumps at their distribution sites, and they're trying to now sell that service to other fleets to come in and refuel. I would think that would scale incredibly fast to where waste management will then just open it up to the consumer where they can go and gas up their car. What kind of a range does a car have on natural gas? Can they go to and from a waste management center to fuel up, or does it have to be within a local radius?
That would be
I think they've got a reasonable range. If you're talking about LPG, it's probably not too dissimilar from a regular tank of gasoline. I couldn't comment on the waste management, but there's enough of them in the cities I live that I'm sure that vehicles could do it. But they're probably looking still for the convenience of having a gas station just around the corner.
And there's a lot of them in Florida that are talking about just converting like one of the regular gas pumps into natural gas and along with the diesel, and maybe putting it on the diesel island. Yeah, there's a lot of that conversation going on, and it sounds fascinating.
And again, I'm going to mention that it is very short-sighted that when you have areas in the center of the country that get absolutely wiped out by tornadoes and other issues, that they don't, when they have to rebuild anyway, that they don't use natural gas as one of the extras, as one of the options for building infrastructure on a county-by-county basis.
Sure.
And just subsidizing, the amount of money that goes into these areas is phenomenal. The number of cars and trucks that get destroyed is tremendous, and I just don't understand why we don't rebuild with something that is obviously part of our energy future.
Well, T. Boone Pickens would agree with you.
Well, when he calls, I'll be happy to discuss it with him.
That's right. Yeah, and he can be a guest on this show anytime, right?
But it's very short-sighted because it's obviously coming.
Yeah, it's amazing.
And what better art can you produce than starting with a blank canvas? And that's what the infrastructure in these towns and counties that get absolutely wiped out represent.
Yeah. Oh, yeah, there's no doubt about it. And you see the stories that, they've been leading the newscasts, well, aside from all the listening stuff, but the gas prices in the Midwest, have you seen that? They're well over $4. It's
up in Michigan, they're $4.20.
Yeah. Oh, yeah. And it's like, you just sit there and you go, holy smokes. Yeah. And here, just on the east coast of Florida, our gas prices went up 14 cents last night. I mean, it just, who knows? Who knows what the reason is? But, Laurence, hopefully this will be the first of many appearances on the Money Info Show, and best of luck to you.
Well, I've enjoyed talking with you, and I hope to do that. Hope to do it again. Thank you very much.
All right, you bet. All right.
If you think about it, if you think about the cash flow of that company, you're talking about a company that has a market cap of $30 million. 300 barrels of oil a day is $300,000. 320, as he said, is $300,000. That's cash flow of 1%. Pardon me. 1% every day they operate.
Wow.
Yeah. And that's phenomenal when you consider that they don't have any converts out, they don't have any debt out.
Yeah.
The growth potential there is monumental.
Yeah. Oh, yeah. Yeah, it's...
Now, have you ever seen on I can't remember, Discovery or History, the show where they have these guys in Kentucky drilling in their backyards? They'll just one day
Backyard Oil.
Oh my God!
Backyard Oil, it's called.
I love it.
I did see it. I saw it a couple of weeks ago, and I was, sitting around laughing. But
Backyard.
Oh, I think I want to send my kids in the backyard with a shovel. Go start digging.
Get your 11-year-old out
The
there.
success of some of these guys, you're only allowed to drill, 4 wells or something. And the success of some of these guys in their back, they got 2 or 3 wells, producing wells in their backyard.
And they find their drilling spots by letting a raccoon loose and wherever,
or
a bird
a
or
chicken, a chicken,
they let a chicken loose. It's just crazy how they figure out where to drill.
Backyard oil. Okay.
Oh, it's hysterical. What a great show. A bunch of Kentucky hillbillies that let a chicken loose to find a drilling spot. They let it drill down and they blast oil.
Before they did that, they paid $1,200 for the rooster at an auction, at a wildlife auction in Kentucky. I mean, the show is hysterical, but it still is somewhat representative of what happens when you have, a moderately plentiful commodity that price-wise, dictates more exploration.
Wow.
Kentucky. Unbelievable.
The Duck Dynasty of oil, right?
Yeah, pretty much.
Oh, my God. Well, Casey, what's your website? Let's give it out to the folks.
TsunamiStrike.com.
All right, and the spelling on tsunami, as we had a listener ask about that last week.
Yep, tsunami is TSUNAMI. And it's interesting. Tsunami Strike. I don't use Google Analytics because there's a slight delay. I use a different code that has real time. And when we're talking and I give it out, I watch people come and hit the site. It's really cool.
Yeah.
It's a great reach. I'll say out the name and I'll see people. I'll see the graph start to go up. So yeah, it's TsunamiStrike.com.
There you go. All right, and Michael, your website for Princeton Research is pretty obvious.
It's www.princetonresearch.com, and I have a Rule 17b disclosure. Well, Target is not a customer yet, and we haven't made a contract with them. I started buying the shares in Australia, and I've bought about 400,000 shares, so I have to disclose that. I own about 400,000 shares bought in the Australian market.
Okay.
As part of Rule 17b disclosure. But I'm hoping Target will become a client of Princeton.
Great.
Because they're certainly worthwhile, and the stock is, in my opinion, worth quite a bit more than where it's trading right now.
That sounds great. Charles, how do we get the text service?
You text the word updates, UPDATES, updates to 69302. And if you're trading options, it's the only way to be on top of it.
And again, you've got, as you mentioned, the big the $100,000 account, and then the smaller account as well.
Right.
Yep, that sounds
and
great.
And we're very active in both.
That sounds great. Well, this has been a very interesting story. I think Laurence Roe is fascinating, and you think that. Boy, there's just so much oil in West Texas, and and we've heard it for years. I'll bet we have barely scratched the surface of that. I believe that we've got hundreds of years down there, and you're not even talking the shale plays that were discovered back in the 70s in the Rocky Mountain areas. I mean, you start thinking of Four Corners. Up in that area of northern Arizona and Colorado and New Mexico, Utah, in that area, there is tons of shale oil up there, and nobody's going after it because a lot of it's on federal land. So very, very interesting stuff. So what about we got about a minute left? What about next week, guys? Which
part of next week?
What is interesting for next week? Do you think, or in the next week?
I'm pretty amazed at the way the market's holding up. We're down 60 now after being down 160.
Yeah.
And of course it is a
June swoon.
Yeah,
and June is typically a bad month.
Okay. Yeah. Okay, Mike. That's interesting.
But you can't fight the Fed, and one of the Fed chairman came out yesterday, or not chairman, but one of the presidents came out yesterday and said QE3 is going to continue.
Oh, Sure.
So we'll go to QE. You'll be a QE 47 before you know it.
Yeah, and your son's going to be paying 50% interest rates, too. Oh.
That's right.
Oh, man. Guys, we'll talk to you next week. Fascinating guests today, Michael. Good job. Great get on Laurence Roe of Target Energy. They're on the OTCQX. Symbol TEXQY. Interesting, folks. Aussies. All right. This has been Money Info, brought to you by Princeton Research. Don't forget the text service at princetonresearch.com. Give Mike King a call in Las Vegas if you have any questions. This is WPSL, Sports Exclusive.